Digital identity. It's something that sounds great and everybody wants, and yet it's not embedded in our systems. Why? To try to find out, I asked Joshua Kroeker, CEO of Mitigram, a Swedish trade finance fintech, here on the JDB Report. Joshua Kroeker, welcome to the JDB Report.
Thank you. Happy to be here.
So I invited you on the program because we're talking about digital identity. You have been involved in trade finance and digitalization efforts for, I guess, the better part of your career. First
Yes.
at HSBC in Asia, and now you've moved, and then you were part of Contour, which was a consortium-led effort initially, which then became a privatized company, a vendor. And then for the past few years, you've been in Stockholm, now serving as CEO at Mitigram, which has a more of an API-led, centralized approach to facilitating trade with, I guess you've got both corporate treasurers on one side and banks on the other. I hope I got that right.
Yeah, correct. Definitely.
Okay. So with that in mind, with that background, uh, would love to get your take on when we talk about digital identity in your world, what does that mean and how complete is it, particularly when we're talking about anything that's cross-border, where a national identity within a domestic context is not going to be enough.
Yeah, and I think that's the challenge, right? Everything with trade is typically cross-border. Like, yes, you'll have some trade finance that happens domestically, but the vast majority of it does cross borders. And I think that's been one of the biggest challenges for the industry to overcome is how do we build these ecosystems, these digital ecosystems that do span across borders. And I think that was, the mission of a lot of the consortiums and blockchain networks is saying, let's build it on a decentralized basis. So that's the most sort of democratic way of building a global ecosystem so that there's not one, party controlling it and it can be sort of a neutral network. I think that was a very bold and ambitious path, and it, obviously failed under its own weight a little bit in terms of, that's starting at the end, if you will. So the end is that you want this very wide, very democratic, very decentralized network with very smooth, streamlined transactions. The problem is that's not where corporates are today.
Okay.
Where trade is today is sort of in the mud, if you will, right? It's still a lot of paper, it's documents, it's showing up at ports, it's, using highlighters and crossing out documents. And for them, they love the idea, the vision of this beautifully connected digital world where everything is streamlined. But I think the biggest lesson is you can't change everything at once. So all of these components are still super important, which is, how do we connect corporates together, buyers and sellers? How do we connect corporates with lenders? How do we provide an identity and trust in that network? How do we provide products and workflows that facilitate the different needs that different trade routes have in terms of risk and working capital? So the needs have stayed the same. I think the only thing that has changed has been the approach, saying, should we paint the big vision? And hopefully that's a big enough sort of magnet to drive adoption fast enough. Or should we start where we are and sort of, piece by piece, sort of build Rome?
When you talk
And I
about
think that's
that,
the approach we're in.
yes, thank you. When you're talking about that build out, I've been recently focused on digital identity and finding ways to attest that X person is CFO at Y organization and is
Yep.
therefore allowed to sign off on a contract, for example. Um,
Yeah.
in your world, is that part of the basics, or is that a nice to have that comes later, and you're really just focusing on just getting a bill of lading or a freight forwarder's contract or something just to turn into ones and zeros so that a machine can read it?
No, I think it's critical. And I think it's important to know again, like where it happens and how it happens now. So the way it happens now is everyone's identity in sort of this ecosystem is based on their membership in sort of a trusted parties club, usually a bank. So your identity is then your bank account number. So I work with a bank, and then the bank can then communicate on my behalf with a different trusted party, which could be a bank of my supplier, of my customer. If I want to work directly, with that corporate counterparty. Mostly it's email and signatures, and no one's really validating a whole lot of that, and maybe it doesn't really matter. And I think a lot of this is based on sort of a mutual trust, and where there isn't mutual trust, indemnities. So, for example, if you join a digital platform with the bank, what the bank will say is, okay, I'm not going to validate, who is sending me this instruction. If you want to use this technology, you need to sign an indemnity saying whatever instruction comes through, it could have been from the CEO, or it could have been from some admin assistant or the janitor. I'm going to act on it. I'm not going to go and validate that that person had signing rights in your company, et cetera. So then it's then incumbent on the company to put in place controls, users, policies, so that whatever goes out on that network is then okay for the bank to act on
Right.
it, or for the funder to act on it. So we don't have this sort of a concept yet of a digital identity that goes down to the individual user, but everyone sees it as a huge way forward, rather than managing these super complex sort of signing roles and responsibilities.
It also seems to me, just listening to your description of how it works, that for large corporates, they probably don't mind this so much. I mean, banks exist to serve them. They can tell the banks what to do. And yes, they're taking on that risk, that liability, but they have the resources for it. But for smaller businesses, this would be impossible or very risky.
Yeah. And that's where it gets a lot looser, right? So if you look at like a supply chain program, right? So you have like a large buyer, a Walmart or something, create a scheme where they want to support their suppliers. So they have to onboard all their suppliers into some sort of digital ecosystem. The way they usually do that is, you send them an email and a link and say, please register. I'm going to go and post, invoices here, purchase orders here, and then you can submit them, and then I can accept them for financing. But nobody really goes deeper than that in terms of looking at who individually in the company is authorized to submit invoices for payment. And this can create problems, right? Like false
Right.
invoices is a problem with payment details of some individual in the Cayman Islands rather than the company's details. So it does
Yeah.
create then more checks and balances that need to happen to make sure that those documents are in fact authentic, and they were sent and approved by the right people within the company, or you just take the risk.
So when we talk about the benefits, on theoretically they're quite substantial. If we had some sort of more systematic verification process for people and tied to companies, but it hasn't happened yet. So who would be the right parties would have to drive that, and what would be the cost to them? Like, why hasn't this happened?
I think we need to align incentives. So what a VLEI and an LEI do is that it's a transferable identity. It's not locked to one bank or to one platform. And right now, the banks like that the identity is provided to this one entity, and it's only available through them. So they sort of have this locked in customer. The same thing with the platform. The platform goes through quite a lot of work to onboard this corporate. They don't want that party to have a transferable identity where one day they're with your platform, the next day they can take their identity and their history and go to a second one. So it's not always going to be incentivized for the corporate to do this themselves, unless there's somebody who will accept it as well. So if you say a
Right.
corporate, here's the transferable identity, don't be locked into the bank ecosystem, don't be locked into a platform ecosystem. But then it's saying, well, the identity is only good to me if somebody else will accept it. So you have this lack of incentives on both sides, where the providers, want to keep them locked into a closed ecosystem, and then the identity holders are saying, I only want this if I can use it somewhere. So that's sort of where it's stuck now. And this is where I think regulations can come in. This is where I think, other sort of non-government entities can play a role saying, in order to participate in this ecosystem, like a port ecosystem or customs, you need to have one of these identities. Then that could build up a sort of base of these
Right.
identities. And then what has to incentivize the banks and the platform providers is saying, you don't have to onboard them. You don't have to do the KYC. It's already been done. Here's the LEI. Here's the set of ELEIs. It's now a lower entry point, and your cost of acquisition can be lower. So like anything, it's about getting the incentives right.
Right. Are there any market-based incentives that you see could work as opposed to having to rely on a couple of governments that step in a fairly strong way to get the ball rolling?
Maybe. But again, I don't see them today, but I think it's the
Okay.
direction that we're heading. So one of the things that we're trying to do at Mitigram is be more of an ecosystem provider rather than just a software provider. So what I want to do is say, you know what, for me to build every type of software solution required to deliver an end-to-end digital trade finance experience, that'll take, decades. And there's a lot of
Yep.
great solutions that are out there. So maybe a better approach is being an ecosystem provider. So we go to a bank, we go to a corporate and say, tell me about your business, tell me the countries you work in, tell me the products that you work with, and I will bring together a sort of mosaic of different providers to make that work. And I'm not going to make you on board with all of them. We're going to set you up with some identities, including at the individual level, that's going to work across all of them. So if I can sort of position that ecosystem and provide all the connections between them as necessary, common databases so they can get insights into what's happening across their business, then that could incentivize them to do it. And then on the platform side, I'm going to say, hey, all of you are offering very, very narrow offerings. You're struggling with onboarding, you're struggling with origination. Come to us as an ecosystem provider. I will connect you with the corporate, and all you have to do is accept a non-specific customer identifier, use this industry identifier, and that then becomes maybe a market incentive. So I think there is a an opportunity here for sort of a market um, aggregator, I guess, for lack of a better word, and that might provide the
Are,
incentives.
yes. Okay. Are fintechs such as Mitigram or Comgo or Drip, other companies in this space, are they big enough to be that ecosystem?
Maybe we're going to find out.
All right.
It's certainly our ambition, right? So our ambition
Yep.
is to be the largest trade finance community in the world. And we know that we can't do that by offering a narrow product, and we know that we can't do that by ourselves. So we're going to take a much more partner-led, and you've seen this in recent days and week. We've been announced partnerships with treasury management systems like Nomentia, AI document compliance solutions like CompliData. We're working with a KYC provider. We're working with supply chain, receivables finance. So we want to bring all of these things together under one sort of family. Maybe a mosaic is I haven't used that term before, but let's go with that for now.
All right. You heard it here
Where
first. Mosaic.
you can you can then come to us and avoid the complexity and saying that, there's too many providers out there, there's too much choice for the corporate. Come to Mitigram, pick and choose what sort of services you want. We can provide all the integrations and common data layer as well as identity, and then maybe that'll work. But this is still early days. This is still sort of a hypothesis, but we're going to do everything we can to lower the barriers, including giving, free tools, free products to sort of get them in. Maybe even sponsor, the LEI. And then at least they're in a digital ecosystem. It gets them out of Excel, it gets them out of paper and email. And then from there, once they're in a digital ecosystem, once they have a digital identity, adding new things, adding new innovations. If you want to talk about tokenization and securitization of these assets and accessing different pools of liquidity, that's so much easier to do if you have an identity and you're in a digital ecosystem than starting from email, paper, and I call my banker.
Yeah. Last question for you, Josh, and thank you again for your time. The flip side to identity is privacy. Uh, what are the issues that you see? I mean, obviously, if I talk to somebody in the crypto eco space, they freak out about anything to do with some sort of digital identity. They think it's antithetical. But that's not the world that you operate in now. So, but you've got a blockchain background. So I'd be curious to see just how you think about privacy, making sure that whether it's on chain or if it's through APIs, how do corporates make sure that that identity can be credentialed and trusted without giving away information that would be inappropriate or sensitive?
Yeah, so the answer to that, for lack of a better word, is trust, right? So you need trusted providers at the center of this because, of course, everyone wants to know who they're working with, but they don't necessarily want their competitors to know who they are working with. So there is the sort of necessity of privacy and confidentiality, but that's sort of the in a broader sense. In terms of within their ecosystem, they certainly want validated identity with who are they working with. Is this actually Walmart who is sending me this invoice to pay, or is it somebody else, right? So within their ecosystem, it's incredibly important. KYC is incredibly important. Obviously, with banks, regulated entities, incredibly important. They just need to make sure it's not public. And actually, the way that the blockchain community does this, which is everything is public, but it's anonymized. You can go and look at all the different hashes of transactions and blocks. That terrifies the corporate community because they're like, I don't want that because I don't want someone to find out what hashes mean. They say, okay, I want to know everybody I'm dealing with, but I don't want anything public. So it's sort of looking at privacy from a very different lens.
Great. Well, Joshua Kroeker from Mitigram, thank you so much for joining me on the JDB Report.
Oh, happy to be here. Hope to do it soon.